Good morning, folks. Hopefully, everybody's doing well. Let's go ahead and dig right in and make this quick so we can jump into chat, start prepping for the day. So, we've got our economic calendar. We already had some small business index at 6 a.m., and we have producer price index at 8:30. If we take a look, 6 a.m. I'd say we were already in a downtrend, pretty much in the same range, so not much of an impact. And then tomorrow's the big day where we have some economic stuff in the morning and then FOMC in the afternoon. If this is your first FOMC with us, we tend to maybe hit a couple of trades in the morning and then leave it because they don't really take it anywhere until 2 p.m. when things start getting wild. Then we'll be calling out some audibles that, sometimes can be huge returns. So then after FOMC, we have our normal jobless claims and industrial price index, blah, blah, blah. So we also have option expiration week going on this week. So we'll have to see what we get. But we'll dig right into the market here. And as always, for the new folks, I'll give you a quick reminder that in our server, we do have a stock news channel. And every morning when I get up and when I'm getting ready for the day, I jump in here and dig through what is, most recent news, upgrades, downgrades, yada, yada, yada. And usually, like when economic data drops, it will be in here. So, just a reminder that every morning you can come in and kind of get an update from some of the sources that we tend to gravitate to on Twitter because they do the best job with breaking news, with pertinent information. So definitely check out that stock news channel every morning. I'm not going to waste our time flipping through stuff in there during our preps. So, digging in. We had our big breakdown at the end of last week. A big old gap down and pretty much opened like a full ATR down on ES yesterday. And here, I'll just strip everything real quick. You can see key levels are what really help in this game. We open right below 3807. We drop almost to our next level. We come back and retest that same one. Can't close above it. So we basically finish the day tapping that key level down. We drifted up overnight, rejecting the same level. So you can guess it, we're coming back for another test here. Probably going to open near there. I might open kind of in the middle, take a dip, but ultimately, right now, looking for this level to hold before we have any more downside. Have this level hold and maybe send us up to our key zone and to fill some gaps. I could easily foresee going into FOMC that they do come back and maybe fill a gap or two before heading lower. So let's just dig in with the tools. So we also have our third Keltner down right below us and pretty much settling at 3700 big psychological level. So if we do start to slip this 3741, and the squeeze bottom, as we now have. Ay, ay, ay. As we now have a 1 hour squeeze that has settled in around us, right at those key levels. It's never a coincidence, these things. This is how the mathematics work out, that when we arrive at key levels and bounce around them, the squeeze will start to set in around those levels, signifying when we will break, right? So if we start to break lower on this 1 hour squeeze bottom and losing this 3741, pretty much feeling like we'll get to 3700 for a bounce to come back. Should we go below that, I do have an old POC at 3668. So yeah, those are the key targets down today. If we can get through 3807 and head higher, it's up to my zone for a bid to get back to the, what is this? The first Keltner down, because the means here, first Keltner, it looks like the second Keltner's right inside this squeeze and key level. It's caught up. So if we can't get through this Keltner and key level and we give out this 3741, the next Keltner and key level. If we can get through 3807, it's up to key zone that we need to take out before filling the gap. And now filling the gap pretty much gets us to first Keltner and daily 8. All within reach. Maybe a 2-day journey to get up to the daily 8. Let's also check in as I continue my ongoing lessons about moving averages. I love to keep checking in on these moving averages, as well as our beast tool. So yesterday, when we were bouncing around those key levels, I'll go ahead and turn those back on. Here we go. When we rejected that 3807, we reached above it just for a second. If you can see this wick, we reached just above it to slap VWAP, and then when we fall back below the 21, the white line, on a 15-minute, that's kind of your signal to go short. It even comes back for a retest twice of that 21. The last time it tapped it there, it was at that key level. So I love when things kind of line up like this and make it very clear. First 15 minutes, second 15 minutes. We tried one last time after 10 a.m., and then down we went. When we came back, we only peaked above that key level and the 45, the green line, for just a bit, but we couldn't close a 15-minute candle above it. So the moving averages keep us down. This is how we can gauge continuation, right? Continuation to the downside. I chose 15 minutes just because it was pretty clear we couldn't break through. The way moving averages work, if you jump around time frames, you'll start to find, for instance, on a 30-minute, we never got to that 45. We barely peaked above the 21 on that midday push. So gauge-wise, these moving averages work different across the different timeline or time frames. So, you know, a 30-minute, we didn't get up to the 45, which is kind of my true test of a change in trend. So when you step down to a 15-minute, you can at least see that we did get a tap of the 45 and a clear rejection, just a way for me to get a tight view of, okay, we have gotten above this, we need to stay above it. If we can't, great short opportunity coming. Same thing again. So, just a little update on those ongoing moving average lessons that I'm going to keep drilling into you guys to help gauge continuation or change of a trend. And just for the heck of it, let's look at like a 5 minute. 5 minute did get above, even started to flip them. But about the point where they were all crossing over, that can create a magnet right back to test for a bounce. If you don't get it, they start to flip back in a bearish sentiment. I only use the smaller time frames, maybe to start gauging the beginning of a reversal, but try to use like 15 minute and above with those moving averages. Yada yada. I said I'd keep this brief, so let's get right to it. So on ES with Beast today, we are still below those moving averages, but they are the lowest they've been. Basically, yesterday during the cash session, the 45 was still way up at 37.89. Now it's just at 37.75-ish and right by VWAP. So we can continue to keep catching bounces here. Get back above the 45. Purple line VWAP, 37.80. And if we can hold that, close above it, come back, test it, and hold 37.80, we can start to move back up above 38.07, where that squeeze top and Keltner were, and try to get back to zone above and the next shaded area on Beast. So we did have a nice uptrend, now a downtrend. Let's see if that can reverse. And we'll go back to our normal tools and dig through the rest of the names. Let's see, NQ, trying to lead to the upside, up 0.5%. It is near the squeeze bottom, just like on ES, daily, 2-day, daily, yada yada. Actually, it's saying the daily has fired, but if we get back up, that can kind of reverse. Even squeezes can reverse. So we still have a 2-day here at psychological 11,300 at the bottom of that squeeze. Yesterday's low as well. Should we give those out down to the third Keltner, which is now pretty much at an even 11,000. You newer folks may not remember, but way back in like January, February, when the whole sell-off started, I did a lesson to teach and kind of measure how far down we can go, and I talked way back then about getting down to 11,000, and that would kind of mark actual getting into a bear market on NQ. Like maybe some of you guys saw the headlines in the last 2 days since we got down to new lows. On ES, I got a bunch of notifications pushed to me to say the S&P just entered a bear market when it crossed through that threshold at 38.07. So NQ starting to get close. If it fires downside, 11,000 is going to be huge. If it can hold 11,300 and get through the squeeze top. And yesterday's high, it can try to sail on up to fill this gap in futures and get back to that Keltner and daily 8, making the zone up above. On the ruddy, same thing pretty much all around. We're going to have these 1 hour squeezes nice as a nice gauge today. So as we are near the bottom, it's worth taking a long. If we start to give out, you cut and go short because it should accelerate. But if, let's see, if the ruddy can hold 17,000, psychological level, squeeze bottoms, it can actually reach down and hit 17,000 or 1,700 and this daily squeeze or 2-day squeeze because it's saying the daily fired. It can actually reach down there, catch a bounce, and still keep this 1 hour intact to head back up. So let's see if these squeeze bottoms can hold. If we can get through the top, back to Keltner, daily 8. YM. Like everything else, rejected VWAP. Set into a 1 hour squeeze. Now that squeeze is right above yesterday's low. So let's see if we go to test bottom of squeeze, if we get back above VWAP before open, which is looking kind of promising. We need YM to get back above that 30,800, push through 31,000 and start working its way back. If it rejects 31,000 and that 30,800, right on back to squeeze bottoms, yesterday's low, and third Keltner, and big psychological 30,000. So, let's see if this basing that we are trying to do to go sideways can hold us and start to send us back up. Or if we just keep basing into FOMC. So Apple, key levels, right? 132.6, held all day yesterday until it didn't. And we slipped it to get to this 30-minute squeeze bottom. I talked about this yesterday while we were sizing up SPX puts, and we nailed a great entry over and over and over on SPX puts, especially when this started to take form, when I saw that we were rejecting this trend line. It's an old trend line, but, you know, basically pinned between that Keltner and this 132.6, and kept rejecting the Keltner. Talked about this can accelerate through that key level to get to squeeze bottom in that 131. And we got a good amount, pretty much all the way to that 131, almost, right? Like 40 cents off. So that was something I was watching to add confluence to the SPX short that I was calling out as well. We are back above that 132.6, trying to push off of it pre-market. Apple's trying to look kind of strong, but you can see nice wedge going on. So let's see if we continue to reject that trend line. If we can start to get through it, take out pre-market high and yesterday's highs. This daily Keltner will be stepping down, probably near the squeeze top. So tight squeeze today, 1 hour on Apple. As you guys know, we can push in against them, come back, keep pushing against them as they open up, in a bid to try to get back to fill the gap and back to key levels above. And let's see, really closed at 31 with a 5-point ATR. You know, we can at least get back to try to start filling the gap. But that may be where we, ATR wise, we'd be pushing it a little any further past that. So let's see if the squeeze holds. If we start to break down 131, we've got 129.13, 127.28. AMD. Down to this daily squeeze bottom. And what looks like maybe a 2-day is also somewhere around us. Right down there at 80. So pretty clear. If AMD cannot hold yesterday's low, cannot hold these squeeze bottoms, or this Keltner that will be dropping in right at around 86. If we start to give that out, we could accelerate very easily down to 80, get to that third Keltner down in the bottom of a 2-day squeeze to settle before heading higher. But if this daily squeeze can hold us above at 86 or higher, key level is 89.52.90 above to take out, to start going through yesterday's highs, fill the gap, and get back to Keltner's up above at 94. And, oh, I'm sorry, it stepped down a little bit, 92, 93. And the daily 50 back at 96. Amazon down below second Keltner. Interesting little print up here. So let's see if trendline from lows can hold Amazon. If she reaches down to tap this squeeze bottom during the cash session and test this 102. If that can all hold, or this trend line from lows could keep carrying us right through squeeze top back to 108 and filling the gap to 110. If 102 gives out, psychological 100 is where that daily Keltner is starting to, it might even land at about 98. So 198 would be the downside targets. Cat. Oh, man. So, I've talked about the last time Cat was at 200. And this old POC of 193. When it gets near there, you go long. There's an example of these daily squeeze, 2-day squeeze. We get to the bottom, big key level, 200 is a big psychological level on Cat at least. It usually doesn't stay under there very long, only about a day. When last time we were here, I said go long up to that 227, and it carried for a couple of weeks right up there. And within just a few days' time, boom, 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 we're getting real close to that 200. So let's see if Cat is going to settle right here at its daily 200. So it got below it, hit these squeeze bottoms and an old POC through all the moving averages to squeeze top and key level, rejected it back. Let's see if the daily 200 here, which is at 207.5, can be the support we need to head back up to these moving averages. If it starts to give out the 200 daily moving average, I expect it to get back to 200. Price point. To set in a higher low before going back up. So keep an eye at that 200 on Cat. If it starts to give out that 207.5, 205, we'll be getting to that 200, 197.5. If it can hold, right back up to all of liquidity stacked at 215 to 217. Google. From that daily squeeze top and the 4 hours that probably also set in there. That's a 4 hour and a daily. That's why we track these squeezed tops and bottoms, right? Google hit it a daily. It can become a reversal point, especially if it can't get through a 4 hour once it starts to set up. So anyway, fired all that down. Back at key levels that started this move up. I can remember a number of folks in the room that nailed this 2050, 2100 hold that sent us up through the mean. Now we're back at 2100, 2050, kind of a little lower, but we do have that squeeze reaching down there. So, Google, if the market is weak, and does go back to test lows and whatnot, Google could hit the bottom of this 1 hour squeeze back at this little zone, 2121, 2115. If that gives out 2100 and an old pocket 2088, but basically looking for a floor right here for Google to go sideways or push off of to head higher. Really, it was stuck in about, what, a 20, 40 point range yesterday. So, if we can start to take out 2160, get through yesterday's high 2175, to get back to this daily Keltner, which is around 2200, and these moving averages of 2250. So very easy breakdown to the upside, to the downside, looking for these to hold, definitely looking for 2050 to hold. GS. With the gap down, it's peeking its head outside of this, what I assume is a daily 2-day squeeze, which is starting to open up. So let's see if yesterday's low can hold us. If not, I have a key 2175, 275, sorry. But if we can hold yesterday's lows, get back above this daily 2-day squeeze, 286, and we have a little hourly squeeze top there at 288, we can start to push our way back up to 300 with a 10-point ATR and closing at 283. Yeah, we can get back above this second Keltner, 293, 295 today. JPM, right back at low and bounce. I mean, look at that, 1506 and 1502. There's a 4-cent difference between those lows. So let's see if the low can hold so that we don't complete the H and can head back up. And you got a range from yesterday's high and low. So play the range till the range breaks. Meta. Not loving this one. Stuck up in this 2-day squeeze. Probably not going to play it, but you got Keltners and highs from yesterday above. You've got the extent of the squeeze and Keltners below. Those are the levels I'd be playing to or playing off of. Microsoft. Same thing, stuck down on this 2-day squeeze. Saying the daily fired down. Let's see if 242, 241 can hold. Microsoft maybe looking a little weaker, but trying to base. So we'll see what we get on Microsoft. Netflix. Almost down to that third Keltner again. Let's see if 165 can hold us up. A little weaker than everything else, kind of gapping down, while a number of things are gapping up. So relative weakness in Netflix, not a huge interest. Nvidia. Yeah, pretty much the same thing. We've got a range from yesterday's low and high. We've got squeezes to play off of. Step down. No. Sorry about that. I should be on a 30-minute so that we can see the 1 hour and 30-minute a little clearer. So, there we go. Nvidia. See if we can hold this 156, 155, where these two squeezes sit. Yesterday's low of 156. And we got a little wedge forming there. So, play the wedge and this range till it breaks higher or lower. If it can get through 160 and some of these highs from yesterday back to fill the gap and get to 170. If 156.55 give out, 150 psychological target below. QQQ. Squeeze is setting in and getting nice and tight. So, probably going to be watching the 280, 282, 285s. And watching the 275s, 272s, 270s as far as calls and puts leading into tomorrow and to play today. And we've got our pre-market high and yesterday's low. So, pretty easy. We've got our squeeze. We know what this is. We just play off of the range, going long at the bottom, short at the top, till it breaks, and then we are in from the turn, not the breakout, right? So be ready. We could easily reject pre-market high and go back to test yesterday's low as the first play today. How do we play the breakout if we never go back for a test? We let it get through, come back for a test to go long. If it holds, then it's really breaking out. But yeah, use the Beast tool today. It will help give the guide as well. Wouldn't be surprised to see, burger tops and bottoms also falling near these squeezes since they are nice and tight. Roku. At least, unlike Netflix, it is gapping up with the market, so maybe some relative strength in Roku for the streaming sector, right? It's a little maybe difficult to see, but there's a wedge down here leading into open. So, can it get through resistance, get through pre-market highs to get back above these squeeze clouds, or does it go back, give out support, and go back to test lows from yesterday? Not a huge interest though. I'll let it settle, maybe get above 78, 80 before I think about really playing Roku long. I don't know, not a huge interest in Roku lately. I'd rather have an eye on Shop if everything's going to turn and we're going to see upside across the market, maybe even leading into FOMC. Shop has catalyst of the split that's coming in just 2 weeks' time. So let's see if they treat this one a little different from Amazon. Overall, got this, what is it, daily or 2-day? Daily squeeze, all set around Shop right now. And I think, let me step out for just a second. Yeah. Right back near that low, that center back to 400. So wouldn't be surprised for them to hold this low around 308. Maybe as low as 302 to set a new low. And then ramp back up for that split that is coming. So yeah, I'd rather keep an eye on Shop for any kind of long side should the market start to head back to the upside to fill gaps, right? SPX. I have plenty of key levels down here, but definitely we should always mark our gaps, right? I don't normally do charting live just to save everybody time and effort, but here's the quick way of doing it, right? Draw a quick rectangle. Quick rectangle. Boom. So we've got 2 gaps to the upside. If we can start to get through that 38.10, get back to 38.40, we could accelerate quickly to 3900 today. SPX closed around 3750, so we're talking 150 points up on a 100-point ATR. Might not get there today, but we can at least get back to retest. We're going to have a little bit of a gap up, 20 bucks. That will put us right at about the 60. So let's see if 56 can hold. If we can get back above 3800, 3810, we could accelerate up to 3841. Basically where we opened to settle before we take out and fill that gap. To the downside, if we start to lose that 3742, 3710, 3676, yada yada. SPY. Tight squeezes. For today, I'd be watching those 380s, 382s, maybe as far as 385. For tomorrow's expiration. To the downside, 375s, 7270s are the puts I'd be watching, right? Opening at 377.5, is about halfway between that 370 and 385. So let's see. Play the range, the squeeze top and bottom, and this pre-market low and high until one side breaks, leaning a little bit more towards upside just because they can run it up into FOMC and fill some gaps before the information comes out. So, you know, like we sold off into this week. There's a lot of talk that maybe at this FOMC they're going to announce a 75 base point hike instead of the 50 that they have already been expecting and said that they would do and what has been priced into the market. So, should this be that 75 or even a whole 100, that would be kind of a change in direction for them and a little different. But we just gave up the entire pop back. We are back at lows. So in a way, they may have already kind of started pricing in that 75. So, could see them run it up and fill gaps into FOMC. It's basically the point. Play that range till it breaks. Yeah, I need to get some key levels down here for us. So, play the range so it breaks. Obviously, if we break this squeeze and fire down, 370, 365 is the further extent. Square, not a huge interest. There's this nice wedge. So, if the market starts going and if square gets back above 65, I might have some interest, but a little more interested in shop and Tesla. Tesla slipped that key zone that I'm looking for it to get above and hold. I called that zone out, I feel like it was 2 weeks ago now. Last time that we got above it and it held, started the whole journey back to the mean. We're back at that zone. Slipped a little, but if we can get back above it and hold, kind of expecting the same move back up. But we are stuck between these key levels right now. 610, 744, 780. Let's see if we can set that higher low. Hold this and we might see some nice move back to 700. And to fill a gap. Last but not least, VIX. Had that gap from 28 all the way up to the extremes. We did get up to 35 yesterday since we sold off into close. We held that, I'm assuming, daily squeeze top. Almost tapping that 2-day squeeze top up above, which has hilariously always settled at our key level, that 35.30. So if we get above today on VIX, if we get above 33.5 and push off of it, we'll get back to that 35.30 for a test and this 2-day squeeze top. But if we stay below 33.5, keep rejecting it, we can head back to 32, yesterday's low, and to start filling this gap back to 30, 29, and 28. So if we do run up into FOMC, I do expect this to come back to 28.30, right, to try to fill the gap. But if we do start to fire those squeezes to the downside, this is the VIX upside targets, 35.3, 36, and 36.5. All right, hopefully this was helpful to everybody. Good luck today. We'll see you in the room. As always, no beast, no feast. And thanks for tuning in.